Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, September the 23rd, the year 2020. Simple. I know we talk about keeping it simple all the time. One thing that's simple is these videos are for educational purposes only, and your results may differ from mine. But simple. The thing about simple is it gets to the crux of the issue. For example, I've written the all you need to trade is a horizontal line. But then again, do you even need the horizontal line? You simply put a horizontal line on the chart and price either crosses it or it doesn't. Price is either above it or below it or right on it. So the line is just a marker on the chart of a particular price. No more, no less. And when you trade, you're going to enter at a particular price, whether it's at a line, between line, above, below. It doesn't really, it's not really the line. But the other thing about simple is if you've got a whole bunch of things on your chart, a whole bunch of indicators, and it's hard to make decisions because there's all this information. And so to keep something simple is to look at a chart and take away everything that you don't need in your trades. Now, some things are nice to have, but do you actually need them? Do you actually use them? In fact, I was reading, it had something to do with decluttering, and somebody said, if I haven't used it in 3 months, I get rid of it. Well, if that were the case, I'd live in a practically empty house. I mean, I have so many things that I don't use, but that doesn't mean I might not use them in the future. For example, somebody asked me, how many guitars do you have? I said, I think I have four, two electric, two acoustic, but a couple of them I haven't touched in over a year. But should I get rid of them? Well, no. So you have to keep things in perspective. You just can't go overboard. And simple. How much are you willing to lose per trade? That's very simple. You make that decision and you stick to it. And that should be simple too. You just put a stop loss on. In fact, I think I showed you that indicator I wrote. You're an idiot for not trading with a stop loss. And so I think a few of you may have downloaded it and are using it. And the other simple thing, but this sometimes is really difficult, is just not to do any of these. Just no fear, no regret. And, you know, and pain doesn't come from the market. It's your reaction. And so if you lose, there's no reason to get mad. It's just shrug your shoulders and get on to the next trade, because a lot of times if you lose and you get all mad, within a few seconds that other trade came in and you missed the opportunity to get it back and then some. I've done that a few times, and it's something that we all probably struggle with from time to time, because sometimes you can get yourself all frustrated because a trade didn't go your way. And the thing is about keeping it simple, and then if you go back and you try and overanalyze it and say, oh, well, if I would have done this or done that, blah, blah, blah. No, it's you took the trade, it didn't work. Now, if you just airballed the trade, just clicked on it for no reason at all, and it didn't work out, well, then you could say, yeah, I shouldn't have done that. But most of the time, there's no reason to overanalyze a loss. Just like there's no reason to, do you analyze your wins? I mean, think about it. When you have a winning trade, do you go back and look at it and think, probably not. But when you get that loss, then you think, well, if I would just add this one indicator, and that's the path to ruin right there. Let's see, we've got two pairs that still haven't filled. You can see here the Pound is 70 pips off that weekly low. We're down 176 pips from the open, but we're up 70 pips off of that weekly low. Nice little bounce. And most of that bounce seems to be from today. You can see here, price had fallen below, but now it came back, touched the low of that first day of the week, the opening range right here, and then retreated back to the 40 area, which seems to be the launching pad on the pound. The daily, 11 pips above the open, 180 below the weekly open, 627 below the monthly open, and 504 below the yearly open. And right here, once again, there's that inside bar low. So if you short it there at 70, you were rewarded once again. Pound pairs putting in nice ranges over 100. You see we took out the pivot one more time here, and we're falling back down here into the daily buy zone. Somebody was asking me about the buy zone. Traders always want to know which one to trade, rat zone, buy zone. Once again, you have to figure out, do you want to trade away from the open or towards the open? There is no best way. You have to find out which way works for you. And somebody asked this, can you use these on other pairs, because they keep seeing me doing videos with the pound. Yeah, these methods work with all of the pairs, but some pairs it works with them better because of the statistics. And what I'm talking about are the in the case of the buy zone, it would be high minus the open and open minus the low. How far did price move away from the open? You run those statistics, and if those numbers are a lot larger than your buy zone, well, then you've got a pair that can give you a potential win. And if you're doing the rat zone, then these numbers, high minus close off of the daily close, off of the current daily high, and the close minus low off the current daily low, you can see that prices moved enough once again to give you payoff from the rat zone, which we will see right here. So you can see price paid off from the red rats, price also paid off to the green rats. With this range 101, it's definitely large enough. And this was the weekly lower rat zone, monthly lower rat zone again. So it paid off really nice for those who took the trade. Once again, we took out the pivot. And we've taken out the pivot there. You can see we just have a few missed pivots this month. And they're all above. And for the week, we took out this missed pivot right here today. So you can see how these statistics play out. But once again, it moved far away. So to look for that pivot from here, you say, well, maybe it'll fill. So right here on these weeks where you say, yeah, maybe I'll take some shorts out of the upper wick zone here out of the lower wick zone, you can see, and then here, once again, out of a previous lower wick zone, it paid off. And so that's how you can analyze the chart. And somebody was asking me about the wick zone. Yeah, once again, it works for all pairs. Some pairs better than others. Once again, you have to run the statistics, because these methods are all based on statistics, not back testing. Big difference. And you can see here the pound definitely launched off that 40. I was so tempted to pop a trade while just making this video, and but I missed out on about 10 pips or more here. Nice setup here. And since I was making this video, this really isn't hindsight. This was live. You saw it at the 40, put in a 3-ball, price open. There's the scalper trade, and now we're putting in a 2-ball here. But if somebody wants to call it hairy hindsight, they can go ahead. You might be wondering, what the heck is this squiggly doing up here? Well, a trader asked me to make an indicator for them. And in fact, let me pause this video. I need to load up the other indicator. Okay, so I loaded up the other indicator. They like to use the OSMA, and what they wanted to know was how long since the last time it crossed above or below. So I just grabbed the code and made the mods and sent it off to them. And I think I don't know, I think I'm going to upload this on Crestlick if I haven't already done so. So you can go grab it. But this indicator, I made the a donational. So here, you're an idiot for not trading without a stop loss right here. And then here's the TRO OSMA. So that one you can pick up in the mother loads. I'll put it over on Crestlick. Might wait till next month and send it out with the batch so that people who donate get it first. And on this one, it basically, I call it the internal crossover because you can use any internal indicator. So in this case, he liked to use the OSMA, but you can use RSI. You can use a lot of other things. That should probably be a 5 here. See, now you can see the actual value because these values go out to actually 7 digits, but I think 5 is probably more than enough. You can see if you've got min and max thresholds in the indicator, and you also have the midpoint threshold. So for OSMA, the midpoint is 0. We put the max at 0001 and the minimum minus 0001. So you can see the threshold colors, but you can change these if you want. Like so, and you can see, and if it's actually crossing over, maybe if I change time frame, maybe on the 1 minute we might get a crossover. Have to let the nope, no crossover there. But anyway, if it crossed over or crossed above, you'd see an arrow pointing at 2 o'clock, and if it crossed below, an arrow pointing at 5. This is saying above, below, once again, exceeding thresholds. And so let me just show you one other thing about it. As I mentioned, you can use it with other internal indicators. You just have to spell the name right. So we have the IMACD, and it uses the same. So now we've got the IMACD here, and there you can see it's crossing below on the pound. So you'd have to put up a MACD chart. So those are the two indicators. Now, he trades with these. So for him, that's how he keeps it simple. But for other people, you see, in fact, I should probably show you a chart I downloaded. It's pretty crazy, but it's whatever works for you. Because, fellow trader, it's not what you trade, it's how you trade it. So go out there and drain the banks. Keep it simple. This is TheRumpledOne, over and out.